So let's start. First of all, as the president of the Car Sharing Association, I would like to challenge the previous panel because basically they said that car sharing is from the past. So maybe we will have a different opinion, we will see. However, in 30 seconds, could you present each of you as quick as possible to make it dynamic, and then we will deep into the question.
Yeah, hi everyone. So my name is Hans Christian. Come from a company called Cassie. So we deliver tech solution to enable flexible fleet concepts, such as car subscription and flexible leasing. So typically we work with OEMs and leasing companies, rentals across Europe.
Hi, I'm Mirko. I'm from Floyd Mobility. We're operating a aggregator or a marketplace to bring together consumers who are looking for alternatives to owning a car. So that's mostly aggregating car rental offers and car sharing offers. And that's done Europe-wide. Our core home base is Germany, but we've been expanding into France and other markets.
Hi everyone, I'm Biswajit Kundu Roy, CEO of Coastr. We are a shared mobility SaaS platform, really helping with the idea of journey from usership, ownership to usership. And we provide a end-to-end tech solution to mobility businesses, rental companies, car manufacturers, and lease cos.
Bonjour. My name is Jorge Jurado. I am co-founder of Worldwide Mobility. We're powering the world's biggest companies to succeed into mobility services. We include services like subscription software, rental software, sharing, car sharing, mobility budget, and mass service.
Thank you. My initial question mark, is that since the past few years, we see a lot of surveys, and people are saying, yes, I'm ready to give up my car. I'm ready to change my habits. But if all the results have been true, my turnover should be 10 times what is it today. So my question to you is, in your opinion, how big is this shift? And we can keep the same order.
Yeah, so I think we work mostly within car subscription, and I think if you go a few years back, it was anticipated it will be 20–25% of total new cars being sold, and will not reach that. So I agree with you, the shift is moving slower than expected. We still believe in the underlying drivers of customers want more flexibility, more digital sales, you bundle services. So we still believe that, but I think the growth that we anticipated this year and the next has been pushed 2 to 3 years. Luckily, we still see players succeeding in this space, but it is tough conditions out there. So what we see now is that we have about 60 different providers on the platform, and 2 years ago, we saw most players sort of could succeed and be profitable. Now it's the larger players, the OEMs, the leasing companies that have unique access to cars. They can buy them at an attractive price. They have good financing, and they are able, maybe most importantly, able to bundle business models. So like a rental with short-term, long-term, you can sell car and you can sort of take them remarketing. So it's more, yeah, you need scale and volume to be profitable, and we see some players reaching that now, but it is tough out there.
Yeah. For us, we've been in business for 21 years, and we originally started in the leisure car rental, so holiday car rental basically. Our core customer base is in Germany, and what we've noticed in our numbers is that over the years, we've moved away from giving you a rental car in Mallorca towards now approximately a third of our business is actually domestic Germany, and a lot of that business is happening in the big urban areas, so that's Berlin, Hamburg, Munich, etc. And we also know from our customer research that the number of people who say that they no longer have a car has doubled in the last 5 years. So we've gone from 15% of customers who say I don't have a car anymore to 30%. And these people are obviously looking for alternative solutions to owning a car. And if you're in a big city, it increasingly becomes actually uncomfortable to have and own a car. And that's also one of the reasons why we've invested into the car sharing space, because car sharing is increasingly becoming a substitute for the traditional rental car, because it's just a so much better user experience, and there's all these free floating cars in the neighborhoods of where people live. So you don't need to go to a rental station, and that's one of the reasons why we've invested into this area.
Hi. So with Coastr, I think when we started off in sort of 6 years ago, fundamentally I'm a regular user of car rental services. That's why I started the company, because I found the whole experience of renting cars quite shocking sometimes. And one of the first things that struck me was, if you can't make it easy for getting access to a vehicle, why will somebody leave their private vehicle, right? So the access bit is the most important thing, and I think in this industry currently, the way we see it is there's so many different options. You can rent a car, you can share a car, you can subscribe to a car, you can lease a car, but the average consumer is confused. Where do they go, right? And I think we have not made it easy historically to allow them that access to a usership model. So with Coastr, our fundamental belief is it's going to be all about the customer experience and the customer journey, where they can come and get access to those vehicles more seamlessly. Hence, we call ourselves a shared mobility platform, which means, as a consumer or a corporate user, you come to one platform and get access to a vehicle for whatever you need, whether it's for an hour, which is car sharing, for a few days, daily rental, for a longer term, which can be subscription or flexi. So that's kind of what we are trying to enable in the market.
The subscription market in general is growing. Netflix, Spotify, everything where we can subscribe. But what happened with the subscription of vehicles market? Weeks ago, I read an article that says that the biggest consulting groups estimate that the subscription vehicle market will be valued at 30 to 40 billion euros in 2030. So it will be a huge market for cars. And another thing is in a survey that was making for BCG consulting group, it estimates that it get the conclusion that the 75% of the people of baby boomers who was born in 1946 to 1964, I think, consider that have a car is really necessary. But only the 45% of the GNC consider the same. So we are changing all the perception of the car ownership.
Yeah, definitely. But the first challenge for me is that they are passing their driving license. Yeah. Okay. The first panel this morning was about data. And Biswajit, I have a question for you. So, in your opinion, how important is data? What role is playing data in that shift?
I think going back to my earlier point about really learning about the customers, technology, of course, and data itself plays a key role, because if I kind of draw parallel to some other industries, like, so I come actually from the banking industry, right? So before I started Coastr, I used to work with big banks, and trying to really change that industry using technology was a fundamental shift. In fact, I was with NatWest Group when the first mobile banking app came into the UK market, and nobody adopted it. People were like, what is a mobile banking app going to do? But can you today imagine your life without having an app for your banks? You can't. So I think the fundamental point here is that banking industry has really learned about their customer through really understanding their needs, building services around them to make it easy so that they don't have to come to a branch. We need to do the same with car rental and shared mobility solutions, where the digital customer journey has to be about the user, about the customer. And I think that's where fundamentally data can provide a key insight about what they really want and utilize those kind of insights. Of course, we have great technologies like AI, generative AI now, to help us learn about customer experience and their needs much better than 5 years ago. So I feel the more and more use cases will come in terms of utilization of data to power that.
Thank you. And with the previous panel, we have seen that there is a lot of flex offers and a lot of differences, and OEMs are playing, car sharing companies are playing, a lot of different companies are playing. So in your opinion, what is the category or the group that will be the most successful, and what is the secret sauce in order to succeed?
Yeah, so we see that the different players are attacking the subscription market differently. So we typically see rental players offering very flexible subscription, like short term, and that fits well with their other business model, where you have short-term rentals and maybe peak seasons of a summer vacation, those sort of things. But an OEM and a leasing company, a dealer, is not equipped. They don't have the capabilities to take cars in and out all the time. We see dealers offering a little bit more, like 6 to 12 months, because they use it as a used car generator. So they just want the car out, get paid for it, and then take it back when the right time is to sell it. And then we see the leasing companies and the OEMs typically offering more leasing look-alike services, but maybe with added flexibility. So the car subscription product is sort of at one side going into leasing, and then at the other side going into rental. And then you get, so we have, if you take Kinto, which is Toyota's subscription service, in the Nordics, it's in Norway it's called car subscription, in Denmark it's called long-term rent, and in Sweden it's called flexible leasing. But it's the same product. So we don't sort of take that discussion. We don't care as long as they're on our platform. But I'm not sure that car subscription as the name for the product will end up as the winner. I believe more like in flexible leasing, or I think that is what customers know. And we see that the customer acquisition cost is lower when you use terms that the customers understand. So introducing, there's so much new things about the subscription product. So at least if you can make something a little bit more known, then it's easier to get the customers on, and they can experience the difference.
So Jorge, we see that there is a lot of different offers. So in your opinion, how we will move in the near future?
Okay. Nowadays, we have many options to move. We have car sharing, we have scooter sharing, we have public transport, bike sharing, everything. The subscription model, the rental model, leasing, everything. So this is, I think that we will move in through mobility ecosystems. A single app, for people who don't know, it's a single app where you can find everything, all the services included in one single app. For example, the mass services, all the mass platform services included in the app, the subscription model, the rental model, including only, nowadays is introducing the mobility budget. I don't know, that it will help to, it will be integrated too in the mobility ecosystem. And we will have too the drones, of course, the Hyperloop, the hyperluxury trains. What else? What else we have? Flying cars, yeah, and all the services will be integrated in one single app. Is the way that I see it. And actually, we are working that we are creating a big ecosystem that the company can choose what models can take and bring in one single app. For example, with Kinto, we are working with the subscription model and the rental model. With Arbal, they want the subscription model, the rental model, the mass platform, and everything. So the company can choose what models can put in one single app.
Let me challenge that. Because I remember on those conferences a few years ago, we were all talking about autonomous cars. And we are saying, okay, in 2022, 2023, there will be autonomous car everywhere. Then we started to talk about mass, mobility as a service. And this is the great solution. Everybody wants it. We will have mass everywhere. I'm still looking for one single mass success. So, Mirko, you have a lot of data. In your opinion, and it's linked to what we said, what is exactly the customer demand? What is the customer expectation? Because it seems that sometimes we are building something that customer is not looking for.
That's a very broad question. we as a business only exist because there's fragmentation in the market, and there's lots of different operators who have different business models, different pricing structures, etc. And the reason customers come to us is because they want to find an easy way to make these different offers comparable, easily findable, these offers. And that's really what we're working on. And just to give you an example, at the moment, our car sharing and car rental searches are different, right? Because in car sharing, the fuel is included, the product is different, it's a different user experience. But over time, we want to get towards a place where the customer doesn't have to think about whether he wants a car sharing or car rental. He has a need, which is, I need a mobility, I need to get from A to B, or I need to transport something. Just show me what is the best available option. It might be a car rental, or it might be a car sharing, it might be a digital car rental. And but in the end, I think the industry has the problem that we're trying to put things into too many buckets. And we heard about the different namings for car subscriptions. People need mobility. They want an easy way to find it, to access it, compare it, and then basically make a decision on whether it's the most convenient option, whether it's the cheapest option, or the most flexible option, etc. And that's it's a big challenge. It's not easy. But that's what we're focused on, and we've been working on that for over 20 years. So, yeah.
Just wanted also to maybe challenge a little bit the mass thought, because mass often works like a marketplace, right? So you take away the friction for suppliers to find new customers and customers to choose the right product. So we thought that that would be the ideal solution for car subscription, because all the brands are launching their own services. So it's very fragmented. It's difficult to find the right provider. Now we've had experience on marketplaces for a couple of years with Autoscout24 in Germany and in the Nordics. And the conversion for getting customers is much lower. We actually see that we don't find better customers for the suppliers. So there's something about the market not being mature enough yet to find better customers. And it is a little bit different than in real estate or when you built the marketplaces, where you went from newspapers, right, to a digital. But here you have really strong brands that are going directly to the customer. They want to own the customer. So we haven't sort of seen where you bundle a lot of players together. It just makes it confusing. So we see if you have a conversion of 10% on your own channel, typically it was 3% on the marketplace, which was shocking for us because we thought it would be even higher. So we sort of have data that contradicts what we thought would be right. So and that's very interesting. Yeah.
I think just to add a little bit, and probably in favor of mass, not necessarily challenging that, I think there are some use cases about mass. So we are working with Toyota in Japan, and one of the reasons for deploying mass is actually carbon neutrality, right? So they do want consumers to use, let's say, electric and urban vehicles, and also share, like not have private vehicles, make journeys which are more carbon neutral and more effective in terms of reducing carbon emission. So those are the use cases which I've seen across being implemented, which allow or require more mass approaches, so that at the end consumer can make the journey in the most effective net zero objective. But yeah, I mean, is it going to be a ends all meets all? Probably not. But there are definitely reasons why mass can succeed in certain isolated or focused areas.
So coming back to data, every single car now is connected. And do you think that connected cars is a game changer in that role, in that environment? Whoever wants.
I can at least comment on that. I think if you have a disconnected fleet, you're sort of in the dark. You don't know what is going on. So we see a huge advantage of having telematics in the cars. We use it for quite a lot of things. Everything sort of knowing where the fleet is, of course. We immobilize the car if the customer is not paying. That's very effective. You use it, of course, for virtual keys. You don't have to have people present when you deliver the car and return it. And then also like real-time mileage, having that when you are tracking value depreciation on the fleet. And then you can start sort of combining all that telematic data with your other data. So we have, as an example, we sort of have like a green, yellow, red on each vehicle. And instead of green, then everything is good, it's profitable, it's a high demand for the car. Yellow, you need to do something, right? Increase the price, mileage is overrunning. And then the red one is actually sort of, you should sell the car. We get market prices, we can connect to the credit facility. So it's sort of telling you the business case for selling it is better than having it on subscription. And I think in 22, when the used car market was really good, 60% of our cars were red, which were basically telling, this is our own platform was telling us you're in the wrong business, but now that has turned.
So how are you connected with the cars? How did you get access to the data?
So we use different, we would like to do it through an API, but it's not good enough, or at least that's our experience. So either we have a CAN bus installation where you get like full functionality, but that is very expensive. So it relies on the car being on the service for quite some time. Or we use OBD2 connections in some cases where we only want geolocation. So then we use it for automating toll passing transactions and things like that. But yeah, ideally we would like the API. We're waiting for that.
Ideally too. So that's the moment for the message for the policymakers. I am a fleet operator. I am buying the fleet. The car belongs to me. The customer is mine. If he's giving a GDPR consent, is to me, and the data is still going to the OEM. Thank you for the new regulation soon.
If I may add, I mean, we do the same. So connected mobility is a big part of, from day one, how we have kind of developed the Coastr platform. I think one of the things we have realized is you have to always have a sort of combination strategy. So yes, the OEM APIs are evolving slowly, if that's the right word. But there are some distinct advantages of using OEM APIs as well, where possible, because you don't have hardware which fails. You don't have to replace hardware, faulty hardware, ship them, install them. So I think we have been working with a partner called Smart Car, for example, from day one, and they have definitely given us an advantage. We continue to look for other partners and sometimes also directly work with OEM APIs, and genuinely believe that I think as more and more electric cars come through with more digital interfaces, I think there's a big technology change happening in how connected mobility will change and offer those APIs, and I think OEMs are realizing there's a good value in exposing those data and location APIs as well. So I think it's important to have both aspects in your strategy, so you're not just entirely relying on hardware, because I think the industry is slowly, gradually shifting to OEM APIs as well.
But I would also like to challenge a little bit what you said earlier, that every car is connected. Every car in theory could be connected. They have the capabilities, and this is actually what we see from particularly on the rental side, right? The digital car rental is still some time away because there's a lot of hurdles to overcome. You still have to use a lot of these hardware boxes to make cars digital, accessible, connected. And I was actually talking to one of the big car rental companies because I showed him a picture of a rental desk in Munich airport that I went past to go into the car sharing park and just swipe the app and drive away with a car. And he basically said that the fleet turns over every 6 months. They have a diverse fleet with lots of different OEMs. Each OEM requires a different kind of setup. To install the box and take it out again at the beginning and the end of the rental is still such a big hurdle that they haven't really progressed as much as in theory they could be in driving the adoption of digital car rental. So there's still a lot of hurdles to overcome.
No, I'm fully with you. I'm saying that cars are connected. The issue is that we cannot access the data, which is totally different. Jorge, you were managing a fleet, and finally you are managing a tech company. Why? Were there no business model? Were there too many fraud? Are you making more money in tech company?
No, we were launching Mondocar. It's a subscription model in Spain that we launched with the biggest dealerships of BMW and Mini in Madrid. So we launched it because we want to try it at zero. We want to know more about the subscription model and what is happening and if it's profitable or not, this model. And we noticed that it's a good model if we work it good, and now it's one of the biggest subscription models in Spain. So we decide to start selling that software and hardware for other dealerships, OEMs, and rental companies too that want to introduce in the subscription models.
And where is the money, in your opinion?
In both sides, yeah.
Yeah. You are very politically correct.
Yeah.
Hans, what to add? What do you want to add?
No, I think I have the same experience as you. We had our own service called iMove. So it was not like a lot of cars, 1,500 cars, and we sort of learned the hard way to be asset heavy, and it was the system was telling us everything we did wrong, right? You're not buying the cars cheap enough, and we know it's we don't have the best financing, we know. So we sort of realized that we don't have the capabilities to succeed it. So I think we also sort of took a sensible shift to the technology, but I kind of miss it because it was an amazing innovation drone to have. So we had one customer that wanted to only address the female segment. Only car subscription for women, and we were like, we don't know if that's a good idea. So we said, okay, but we turn off all mail marketing for iMove for a week. Let's see how that goes, right? Because we could do that, and it was a catastrophe. It was 7 times more expensive to get customers. The conversion was almost zero. So we went back and okay, these are the results, but we want to try it another week. So then we changed the marketing, and then we almost achieved the same conversion numbers on just female. So yeah, they ended up going for both women and men, which I think was a good idea. But it is amazing. It's really good to have that asset-heavy understanding, even if you're working in tech, right? Because asset-heavy, it's very hard. So there's a lot of challenges that we can hopefully help our providers to overcome when we have felt it ourselves.
So we all want to promote the multimodality. We all want to promote the changes in behavior. But in your opinion, what is really driving that change in behavior? Is it the price of the car? Is it regulation? Is it the fact that it's just impossible to own a car in big cities and there are too many constraints? What is really driving the change?
Well, I guess it's multiple factors, right? If you hear from car sharing operators who've become profitable, there's often a direct link with what is the cost of the parking of those shared cars in the city, and whether the city decides to make private car ownership more expensive. And I think Norway is also an example where the government has really been pushing forward to make private car ownership less attractive, more expensive, and then you start to see the shift towards usership models. Now, unfortunately, in Germany, the car industry is a big employer of a lot of people in the country, and they have a very strong lobby. That's why in a lot of the cities, whether it's Berlin, Hamburg, etc., private ownership is still very cheap. You can leave the car in your residential neighborhood. You pay maybe 30 euros a year or something very attractive. So that's what's holding back a lot of this shift towards usership models. But I think it's going to come, and more cities. I think Paris is a good example, where now they charge, I think, the cost of owning a SUV has tripled or something like that in terms of the parking, etc. And you will see more cities following it. But unfortunately, it takes a longer time, right?
Just to add, I think post-pandemic, there have been a couple of factors we have seen as well, which is sort of promoting a little bit more flexibility in the usership model. One is availability. I mean, although it's improved, but still not at the same levels as pre-pandemic. And I think the other thing is a lot of automotive manufacturers themselves have realized the need to control the stock and kind of manage the distribution. So it's not the same as well. I think we work with a lot of OEMs, and they are also thinking about reuse of the asset. They don't expect to have the same level of stock as before. And third, I think it's just the interest rates and everything that has gone up, so it means the cost of ownership is higher now. And the other factor is insurance as well. So when you put all of that together, I think usership models are slowly, gradually becoming more attractive, especially in the corporate world, where flex fleet has seen a huge rise because it's just more attractive for them. But in the consumer space as well, I think all of these factors are slowly, gradually evening out as more and more mobility operators are becoming better at pricing the product and making it much more accessible.
30 minutes already done. So thank you very much. Thank you very much, everybody. And you deserve a round of applause, definitely. Thank you very much.